and thank you to all the analysts to join this call. And I'm happy to share that we have done our half-yearly results today, and the numbers are very encouraging. A lot of strategies were put in place in the beginning of this financial year in areas of concern like deposits, and those all are yielding good results to the bank. And I will very quickly take you through the major achievements. So my total business has seen a growth YOY of 17%, and total advances have grown by 19%, while the deposits, which were continuing as concern in the industry, in the system, last Q we had seen single-digit growth, but a lot of improvement has happened in this Q2. And total deposits have grown by 15% YOY, and within which CASA also has seen traction. CASA has grown YOY by 12%, and in terms of absolute number, we have added 15,000 crore of CASA in our book. The ratio stands at our level of guidance, which is to maintain it around 50, and that's what the CASA ratio is there with the bank. Coming to the RAM side, the loan book, so all the three parameters, retail, agri and MSME, have seen a high double-digit growth of 23% YOY in retail, agriculture 34%, wherein large part of contribution has come from agricultural gold loans, and then MSME also has seen a YOY growth of 25%. Corporate book for me has grown YOY at 9%. As I said, gold has been a focus product for growth this financial year, and which has seen a YOY growth of 60%. In terms of asset quality and stress SMA position, we are again very comfortable. GNPA has improved, has come down to 1.84% against 1 year back of 2.19%. NNPA is at 0.2%. Recovery also has been good in this Q2, and with cash recovery of 120 crores, upgradation around 100 crores, and write-off recovery of 255 crores, we have a total recovery of 475 crores. PCR is standing at a healthy level of 98.31, and CD ratio we are maintaining at the desirable level of 78.72 against our guidance of maintaining it around 79-80 levels. Net interest income also has seen a good growth of 15% YOY with an addition of 375 crores. NIM also has been on improvement, and NIM has grown 3.98 from 3.97 and 92 in the last 2-3 quarters, whereas the concerns were getting expressed in the industry whether banks would be able to maintain the NIM, and there may be a level of reduction in NIMs being reported by banks in this QOQ basis at least. But I'm happy to share that we are able to maintain that high NIM of 3.98%. Operating profit also has grown year on year 15% at 2,203 crores. Net profit has seen a remarkable improvement of 44% YOY growth, and we have added 406 crores more than previous year at 1326 crores. ROA year on year has improved by 36 basis points, and it stands at 1.74%. ROE at 26.01%. We are adequately capitalized with CET1 of 12% and CRAR of healthy 17.26%. Overall, what we have seen that the guidance that we have kept for this financial year on various growth and profitability parameters and other efficiency ratios, we have achieved those guidance in the half year, and at many of the parameters we have only surpassed the guidance. And going forward, we are confident that this trend will be only seeing improvement in the Q3 and Q4 of this financial year. So I think over to you, Mr. Srivastav, CFO, will take you through the presentation.
Or that will start question since we have already uploaded the PPT, our result and PPT in option.
Okay. So broadly, this is from our side, and we'll be open to your questions on any of the issues that you would like to take additional information on. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Hope I'm audible. Hello.
Yes.
Yeah. So firstly, congratulations on a great set of results. So I think whatever guidance we've given, we've just, actually surpassed most of them. So I just wanted to ask, would you want to revise the guidance? I think in terms of ROA as well as NIM, we've been outperforming what we've said. So, could we, how do we look at it going ahead? Could we expect, a more robust, could we go to a 2% ROA and a 4% NIM?
Yeah. So, both these parameters which are important, we are performing consistently on the ROA and the NIM, what you mentioned, over the past couple of quarters. And although going forward, we are also mindful that if you talk of NIM, there is a likely rate cut that is being discussed. We really don't know when it will happen, but if that has to happen, I have a loan book of 37% which is linked to repo. And with rate cut, that loan book will get immediately repriced. So while I am maintaining a NIM of 3.92 to 3.98 level, and we have grown NIM YOY almost 9 bits, but we are keeping a conservative guidance for ourselves of 3.75 to 3.85 because of this factor that when the rate cut is to happen, I am going to, for some time, when the repricing or the deposit repricing, which will happen only with a lag, for that reason I am keeping a conservative NIM, and my ROA, which is 1.74, again there is a guidance of 1.6 to 1.65 that would be maintaining for this financial year.
Fair enough, sir. That makes sense, sir. So you also just wanted to know, in terms of a gold loan, we said that, agri loan has been also boosted by gold loan, and in general, gold loans have grown a lot. So could you just, describe what's happening on ground? Is it like the price of gold has risen, that is why that's helping us, or, just somewhat how that's been?
So if you talk of this gold loans, there is a huge market out there, and it is only that despite, banks which have grown this portfolio, commercial banks, over the last 2, 3, 4 years, in fact, after the COVID years, gold loan has seen a lot of traction in all the banks. Still, I feel there is a huge scope, and we have also reoriented ourselves because gold loan, there are 2 basic requirements. One is the safekeeping of the pledged gold ornaments, and the other is the appraisal infrastructure that is required to appraise the gold jewelry when you are coming for a request from the client for extending the gold loan. So with these 2 infrastructure, once they are provided, there is a huge scope still for all the banks to grow. and it is a very beneficial product, is able to easily be onboarded by branches. It is quite a stable advance. It is also giving us that good pricing, and plus the risk weight is zero. So with all these incentives around this product, we have also grown this portfolio, and going forward also we maintain to remain bullish on gold. And the pricing which has gone up is only creating a lot of comforts around this scheme, because over and above what the RBI prescribed LTV, we are only getting more traction there. And in terms of gold also, we are mostly classifying able to take it in the agri gold loan as per the RBI permissible scheme. My portfolio has already touched 13,000 crores, and by end of the year we plan to take it to minimum 15,000 crores, which I see is quite achievable. Also, we have done some co-lending partnerships with leading gold loan NBFCs, and we are also building a sizable co-lending loan book in this segment of gold loans.
Great. So that's great to know. So, and just like last question on my part.
Mr. Javeri,
okay.
I request you return to the question queue.
Okay. Yeah.
Thank you so much, sir. So, ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up questions, you can rejoin the queue. The next question is from the line of Pinaki Banerjee from Home Capital Private Limited. Please go ahead.
Yeah. Good afternoon, sir, and thanks for the opportunity, and congratulations for a good set of numbers. Sir, actually, then coming to the page 7 of your investor presentation, that agricultural sector has shown the maximum growth of 34%. And sir, if I recall, in the last phone call, you had mentioned that you are in the process of doing away with farm credit and moving more towards this investment credit like cold storages and food processing. So, sir, can you give me an update on this, please?
Yes, Pinaki, what we have said, we are actually, if I give you the number, the YTD growth, if you see, my agriculture gold loans in the investment credit and this gold loans, they have grown YTD at 29%, whereas the others, which is the working capital KCC, has seen a growth of 6%. So what we have experienced around that certain concerns in the area of KCC loans, we have also tried to see that we are not growing the agri book in that segment where the concerns are lying. So we have done a lot of changes in our underwriting as to who is actually sanctioning. The sanctioning in the KCC has now been not allowed in branches, and there is a centralized cell housed in the respective zonal office, and that's where the underwriting for agri loans is happening. So we are comfortable growing this portfolio, and where the large part is coming from contribution, as I said, from gold loans. Agri gold loan, YOY 8,000 crore, agriculture portfolio 8,000 crores have grown, out of which 5,000 crores have come from gold loan alone.
Okay, sir. Sir, actually, the next question is like your corporate loan portfolio for the last 5 quarters, we're seeing that it is as a percentage to your gross advantages have remained static at 38 to 39%, and year-on-year growth is 9%. So, sir, have you taken any strategic decision to lower your exposure to the corporate sector?
So, Pinaki, I would like to say that bank will not be missing any emerging opportunities which are available there in the market. Today, we have kept the guidance of RAM versus corporate at 60-40 and plus minus 2%. So, currently we are looking at sectors, proposals which are coming from the upcoming sectors, the infra, the renewable energy, and the like. So there is absolutely no such thought process to not grow the corporate book. Wherever we see opportunities emerging, like the PLI sector, where the government emphasis is coming, we would definitely want to be present there.
Okay. Sir, and just one last question regarding your term deposits, which have grown by about 19% at 1,40,000 crores. So actually, can you give a breakup of what is amount of new deposit and what is the renewal deposit percentage?
You would have the number. So, we just noted this, Pinaki, and I think we will share the number with you. We can go to the next question. We will this data we'll just work out and let you know.
Okay, fine, sir. That's all from my end. Thanks and all the best for the future.
Thank you, Pinaki.
Thank you. The next question is from the line of Deepak Gupta from SBI Pension Funds. Please go ahead.
Sir, thank you for taking my question. So my first question is on asset quality. If you could give us some perspective on your SMA book, which has increased, especially SMA2 book, which has grown by almost about 100% for the quarter on a quarter-on-quarter basis, and your perspective on credit cost and slippages, which remains at similar levels as per last quarter. So.
I think the stress in the loan book is well managed. If you see year on year, it was 7.54 and now we are at 5.8%. I'm talking about the total, not SMA2, but the SMA and total position for the bank. And within which 5.8%, what I have said, it is few of the state entity accounts, 4-5 accounts, which had actually moved to the SMA category, and 1,542 crores are in these 5 accounts. So already while I'm talking to you, one account, the major one, 717 crores from that state entity is already moved to the standard category. So if I'm discounting, removing all this, my stress in the overall loan book is 5.09% only. And as regards the SMA2, I think Concall, you would like to add?
In SMA2, there are only 2 accounts and nothing major, and all the accounts are below 60 crore. To be specific, one account is around 58 crore and one is 32 crore. Nothing more major account are there into the SMA2 book.
I hear you. And sir, any thoughts on your slippages and credit costs, which are at about 1.1?
Sorry to interrupt, sir. Mr. Gupta, your voice is breaking up in between.
Can you hear me now? Is it better?
Yes.
You are talking about credit cost, no?
Yeah, credit cost and slippages. If you could give us some perspective.
Sir, if you see the credit cost, we are maintaining a net NPA of 0.20. So almost everything we have to provide in respect of the fresh slippages. So, and if you talk about IRAC, credit cost IRAC requirement, then it would be below 0.40. So that is the credit cost. Regarding slippage ratio, that you can see that we are able to maintain a slippage in quantum of roughly around 600 crores. So that it will continue in future also. The slippage will be within the range of 500 to 600 crores.
I hear you.
Thank you. The next question is from the line of Samrat Jadhav from Prosperity Wealth Advisors. Please go ahead.
Am I audible?
Yes, sir. Please go ahead.
Yeah, great. Okay, so firstly, congratulations on a good set of numbers. I have 2 questions. One is on the co-lending book, which you have. So, what was on the last quarter and how much is for this quarter?
We have the numbers. Amit?
502.
Co-lending is again from among the various segments. We have looked at this growing the co-lending book, and this co-lending has gone up to almost 2,000 crores we are reaching. And for this, what we have done is we have identified NBFCs AA and above rated, and we have seen how the processes and how the audit system, how the compliances levels are getting maintained. And wherever we have seen our comforts, we have joined hands with them. Our experience is that we are able to negotiate a good NIM. The entire product is technology driven in our bank. So, for example, one of the NBFC in the gold loan segment, so whatever the NBFC is doing loans today from 10 a.m. till 5 p.m. in their branches, I'm able to underwrite and take the share in my books the next day. But the entire flow of accounts, the disbursements, the collection, the reconciliation is entirely digitized, and we have developed this in-house along with the IT of the concerned NBFC, and that's how we are seeing that not only this portfolio we are comfortable to grow with, but we are able to manage this also well and see that the issues around reconciliation are well taken care of. And as I said, I'm finding a very good pricing. We are able to negotiate in terms of service. Through this technology, we are able to give good service, add value in the partnership, and I'm able to in return get a good pricing. My NIM typically in some arrangements is 5% plus, and these are all priority classified business that I am able to do. Like if it is a MSME, it is impacting my micro segment. So there again, I'm able to meet my PSL targets, and we have the opportunity to even wherever we surpass, we can do a PSLC sale and earn additional 1.5 to 2% going forward. So that's how the co-lending we are looking at, and we are diversifying. Today we have around 6 to 7 partnerships, and another 3 to 4 partnerships are under discussion at various stages, and which we will be onboarding very soon.
Okay, so do we have any number that how much this co-lending book would be there at the year end?
So currently we have not kept any number as such, but we had been for the last 4 to 5 months just in discussions. We had experienced this with 1 or 2 good rated NBFCs. We have watched how the portfolio is moving, how the recon, disbursements, collections, everything is working now, having drawn a lot of satisfaction. So now we are actually scaling up. As I said, 6 already have been tied up, and another 3 are under discussions. So we have not put any number as such, but yes, we want to grow this co-lending book in a major way in this financial year, and we will see that this entire portfolio is a high-yielding portfolio for us, and it is well managed through the technology part of it.
Great. Okay. My second question is from the number of branches. So we added around 9 branches last quarter. And majorly was into metro, urban, and I think 2 branches in semi-urban. We had closed some branches in rural also. I think 2 branches in rural. So is it a part, like you said, majorly the income is from the gold loan side book, which is again from the rural. So do we have any strategy like closing the non-performing branches or increasing it in the rural, or majorly it is from metro or urban side?
So if you see, we have a robust branch expansion plan. We have in fact gone to our board and gone with a 5-year roadmap as to 1,000 branches is what we have envisaged, and board has approved this plan of ours, 1,000 branches in the next 5 years. And we done around 600 branches were opened in the last 3 years. And before going into this new branch opening in a major way, we are also taking stock of how these 600 branches opened are performing and whether there is any learning for us going forward. So what we are trying to do is trying to identify the centers basis the growth, where the growth potential lies. We would like to be present there and present there in a meaningful manner. So maybe one center, if we decide, we feel that it should not be a representation of one, it could be between 4 to 5. So we have been following some set of branch opening strategy. We are just in the process of relooking that But ideally, for the next 12 months, we have 200 to 220 branches to be opened as our plan in mind. And this first quarter has been more to take stock, take review of what the performance or the desired outcome of the branches opened so far have been to us. And going forward, if required, we will modify our way of identifying the branches if required. Otherwise, this is the plan we have in the next 12 months, around 200 to 220 branches that we plan to open.
Any plan for international branches? Expansion of international branches?
So currently, we are mindful of the fact that there is a GIFT City opportunity with us. We have already gone to the board. We have board has approved our proposal, and we have submitted our request with the regulator. And we will be in discussion with the regulator and pursuing our case with them to give us the GIFT City license as early as possible. And I think with that, there will be a lot of opportunities opening for doing some ECBs or participating in some global syndications, which are there in our thought process. And I think with that GIFT City formal application already lodged with the regulator, no sooner this approval is granted for opening the outlet, we would be ready with our plan in terms of manpower and going forward the strategy to grow business through GIFT City.
Great. Thanks for my questions.
Thank you. A reminder to all the participants, please restrict your questions to 2 per participant. You may rejoin the queue for follow-up questions. Our next question is from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah, hi, good evening, sir. And thanks for the opportunity. Sir, a couple of questions. First is, sir, in your retail loans, you have around 17,700 crores as others. If you can share a few heads, which all products are there, and do you have any unsecured personal loan book on?
Yeah, as far as these others retails, it includes the loan against property, then top-up loans, our personal loans and other loans which we are granting to our customers, and in addition to that, the gold loans which are classified under retail gold loans. So these all constitute nearly 17,000 crores.
And how much is the personal loan, sir? Unsecured personal loan out of this?
Gold loan is around 3,500 crores. Personal loan is around 2,500 crores. And loan against properties are around 2,000 crores. So almost in all the segments, it is more than 2,000 crores.
Right. And sir, if you can highlight any asset quality trends in unsecured personal loan book of 2,500 crores, how has been the slippages or GNPA? Is there any change in the last 1-2 quarters?
So if you look at my unsecured personal loans book, it is entirely to ETB customers, and especially wherever we have salary tie-ups. So typically, government department or a corporate whose entire employees are banking and drawing salaries through me, I have done this personal loans, and with the salary disbursement, we are able to recover our monthly EMIs, and then the remaining portion is made available to the customer to draw from their savings account. And likewise, in the unsecured, with the pensioners also, we have some portfolio built, and wherever we have pension is where we have actually done this unsecured lending. So to say that this personal segment put together, this pension and other things, it is 3,350 crores, and only 15 crores is NPA out of that. So it's a high-yielding product for me, and it is very much in focus. The concern, I think, where you are coming from, Reserve Bank regulator also highlighting this. So absolutely, this part I am completely comfortable, and we are having this unsecured loans only where the salary tie-ups or pension payments are through my branches.
Right. So understood, sir, and thanks for the detail. So you have the GNP at only 15 crores, but the slippages, let us say out of this 3,300 crore portfolio, slippages would also be quarterly slippages. I mean, in Q1 or Q2, would it be safe to say that the slippages would be around 30-40 crores on a quarterly basis, or would it be even lower than that?
Would you have the numbers?
It would be on the lower side because, as sir told, it is backed by the salary. So whatever the salary, first the salary is being credited in the account, and from that we are taking the installment. So we have not seen that. We have seen the negligible default in such portfolio, and we have not given unsecured loan to the non-salaried class. So in our case, it is almost secured portfolio.
See, 15 crores also out of that 3,300 crores book is maybe where because some demise of the employee, and there is a process of getting the money from their terminal benefits, and terminal benefits are in the process of settlement. So that kind of tie-up arrangements are existing with the organizations who are disbursing salary through our branches, and only against that salary disbursement this kind of loan product is built for them. And mostly are in the government PSUs and central and state PSUs is where we have grown this portfolio. There is hardly any personal loan segment in the non-salaried. There is no, in fact, focus, no product for the non-salaried person to be availing a unsecured loan from the bank.
Right, understood.
Hardly 0.05% gross NPA.
And sir, I missed your comment wherein you mentioned that.
Mr. Mundra, if you have any follow-up questions, may we request you rejoin the question queue.
Sure, thank you.
Thank you so much, sir. The next question is from the line of Rohan Mandora from Equirius Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, I had a question on the provision that we have taken in the P&L. So we have almost 585-90 crores of NPA provision. And if I look at the net slippages adjusted for recovery and upgrade, that comes to around 400 crores. And the PCR has not improved. So just want to understand the consumption of this provision that have happened.
So, as you know that whatever slippages are happening, we are almost taking 100% provision. And
net was around 400. So at 90% provision, it would.
I'm coming to that. Yeah. And there is aging provisioning also that you have to take care in the sort of some asset. So overall, that if you see we have made the provisions accordingly.
Right, because even if you look at absolute slippage was around 600 odd crores.
Right.
If you adjust for the recoveries and upgrades, 220 crores, so you come to around 400 odd crores of net slippage this quarter, right? On that, if we were to build in 90% PCR that we are maintaining on 98%, including PA technical write-off, then that would be around a similar number, 400 crores. So we are still left with around 200 crores. So just trying to understand where is that getting adjusted, because the technical adjust for technical write-off, the PCR is not improved.
We'll provide you detail in this regard.
Sure. That's it, sir. Thanks.
Thank you. The next question is from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Thank you, finally. Sir, compliments to you, sir, Nidhu sir, and the entire team of Bank of Maharashtra. And not only for the good set of numbers, but also recently celebrating your 90th Foundation Day, where the chief guest was the Finance Minister, Nirmala Sitharamanji. She spoke very nice words about the bank. And second compliment is for you recently successfully raising 3,500 crore of equity, which is, I think, the fourth largest, the largest in the fourth QIPs which you have done in last 5-6 years. So my compliments to you, sir. Having said that, sir, most of the questions have already been answered in this long discussion by the various colleagues. I would have only, I have little rather concern, or maybe I need your feedback on the overall business growth. Because if you see at credit growth also, if you don't analyze it, just look at the current financial year 6 months, our advances have gone up by only 6.80%, and our deposits have gone up by only 2%, and 6 months have gone. Even though you are comfortable on capital adequacy and you raise the capital also, but ultimately the bank needs to grow its business. And as per the past glory of the bank, where you used to be 25 plus, 20 plus percentage, what is the strategy now going forward, and what do you think your target going to be for the credit and deposits, sir, for the bank?
So, Ajmeraji, first of all, thank you for acknowledging whatever you just mentioned about. And if you look at my total business, our guidance for this year is to grow the business at 16%, and the advances would grow at 18 to 20%, and deposit will be growing at 12 to 15%. The first quarter was not very encouraging, and that ought to be. But I think a lot of things have started to look up when we entered the Q2, and today none of my growth performance is lower than what the guidance we have kept for ourselves. So I think we are on the right path of growth, and going forward the Q3 and Q4 are only going to be better quarters in terms of banking business. We all know about that. So the overall guidance that we have kept for the full financial year, I see absolutely no concern, no challenge in achieving or even surpassing those. And we just discussed about the aggressive branch opening strategy, and since this 600 odd branches that have been opened in last 3 years also are helping in a lot of fresh business generation in the bank. And going forward, the 12-month plan of 200 to 220 branches, I am sure that the pace of growth of business in the bank will only be going up. With this new branch expansion, with bank being present in more and more geographies.
Sir, with this kind of maintaining the targets for the credit also and deposit also, for credit, if you look at it, in order to meet the target of whatever 18-20% or 17-18%, you need to disburse the credit of almost about, I think, 25,000 crore just in now coming in 5-6 months now, which are left for this financial year. So what is our pipeline of the sanctioned amount as well as the advanced stage of sanctioning, so that we can be sure of this 25,000, 26,000 crore credit disbursement in the remaining 4-5-6 months?
Yeah, Ajmeraji, as far as the sanctions are concerned, so far in the first half year itself, we have made sanctions of around 39,000 crore, of which around 30,000 pertains to corporate credit segment. So disbursal in such projects is based on the various milestones. So they will get disbursed over a period of time. There are certain takeover cases also. So we have that visibility to achieve that growth of around 18% plus minus 2% in advances going forward.
Yes, sir. Point well taken, sir. My last point is, sir, on the digitization, on the IT front. Where do we stand, sir, after having spent a good amount on IT, and I think we are doing it for aggressively last 1.5-2 years. Now, what is the status today? At what stage we are in our IT total digitization implementation end-to-end products, whether in retail or SME credits?
Yeah, thank you, Ajmer Sahab. Actually, you have seen last almost 3 years, we have continued with around 2,700 crore budget, in which the utilization was around 1,900 crores. So, because major of the things really required the overhaul, so in total, if I am not wrong, around 138 RFPs are floated in last 3 years period. Now it is across the board, like in the retail side, in the corporate side, in the operation side, in the customer service side, in the efficiency enhancement side, and even on the compliance regulation side. So in all the areas we have done. Actually right now Still this year we are having a budget of around 1,000 crore, but the pace of that RFPs will not continue to that extent, because in all the areas we have floated the RFPs and all the projects are going on. Most of them are completed, and it will take 6 months to 9 months time to get the result. So you must be remembering that we created a digital business zone, which is headed by a general manager. Now that zone is nearing 5,000 crore, approximately as on today. So it is between 4,500 to 4,700 crore. So here, no employee is actually involved in the business, and through only digital, they have an entire setup like a physical zone. So they have their marketing team, strategic digital marketing course they have done from IIM Rohtak and Bangalore. And they have a risk management team, so they have an entire team. Now coming to the point, there are certain very big projects which bank is right now running. The one is the CRM module which bank is running. Second is the lifestyle banking which bank is running. Now somewhere it is 30, 40, 50%, all those are completed. The next is that entire hardware and software overhaul of the bank. So with this, I think by next 6 months time, the entire the hardware, all the servers will be a refreshed one in the bank. Now with that, we are actually to that extent confident that next 2 to 3 years it will be not more so on a capital side, but there will be a recurring expenditure on the IT. So with this 1,000 crore which we have taken approval, and last board also our MDs have told. So that is going on. Coming to the RPA side, earlier we used to tell around 35, 36. Today I think we are standing where 60 is implemented today. And from the board we have taken approval of 150. So you can think of that 90 still it is there. Now coming to STP's journey, around 12 to 15 we have already launched. Around 5 are there which are in the CUG state. Because see, the technology pertaining to the customer side should not be straight away, or put to production. So what we have done in our bank, you have seen earlier also as a risk mitigation, that whenever journey is there, move to production, we first move to some 2 or 3 branches. Then we move to 1 or 2 zone. And then we take stock of the situation for a month or so, and then we move to pan-India basis. So right now, I think the 3-4 journeys are there which are under CUG state for last 15-20 days. So you will be seeing all these things which are going to be rolled out in the present quarter. And then RPA also around 10 to 15, 20, which the team has planned, they are working upon that. And the hardware, which refreshment is taking place, the entire at DC, infra, and our even the in-prim, our servers. So all those are getting refreshed, and I think that will be completed by February 25. So this is the right now scene, and journeys, I think next 5 to 6 journeys will be launched in this quarter, and similarly 2-3 journeys will be launched in the next quarter. Because March we don't keep anything as such, because it is a quarter end. And one more very important, that we build a very good audit software, and which is having almost 18 modules, which is going to be rolled out, I think phase 1 in this quarter and phase 2 by the February 25. So these are the status as on date on the entire IT infra in the bank.
So thanks, sir, for such an elaborate information on the IT front. Definitely, I have been watching you at that center also, I think which is created here in Mumbai. That IT, you call it what, as IT? So really very, very impressive. Thanks a lot, sir. And all the best to you.
I think like what you asked about the business growth, they will be also be a good contributor going along, when more and more journeys are launched. So they will be a good contributor in this total growth.
No, yes, I am sure that would definitely yield the results there. Only, because we compare only quarter to quarter, and especially in this year, even up to September quarter, our credit and deposit figures, it's there in the entire industry. It's not as only your bank, but I keep Bank of Maharashtra separately, in a very, very high esteem, and I'm sure that you will definitely meet the targets, whatever has been given. Thank you, Nidhu sir, and thank you the team. Ashish sir and Rishi sir. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to join the question queue. The next question is from the line of Bhumika Jain from Desvelado Advisory. Please go ahead.
Hello, sir. Congratulations on a good set of numbers. My first question was the cash flow from operating activities shows a negative movement approx around the 14,000 crores in this first quarter. In the first half of the year compared to the positive 14,000 crores in the first half of the FY24, which was basically driven by the advances in provision. So my question is, how does management plan to manage the liquidity in the coming quarter, especially considering the ongoing bond issuances and rising interest rates and borrowing?
Liquidity management. You are talking about liquidity management?
LCR?
No.
Yes, sir, liquidity.
Your voice is not clear.
Madam, it was not clear. Can you please just explain the...
Bhumika, if we talk about the LCR is what you were looking for?
Or liquidity?
Sir, my question is on the liquidity part. Yes, sir.
With the bank or with the...
Okay. So, liquidity that if you are talking about the cash flow, hello?
Yes, sir.
Yeah. So, in respect of the liquidity that we are quite comfortable, and if you see that we are having the sizable investment portfolio and most of the related to the SLR securities, and recently that we have raised the 3,500 crore equity capital as well as the infrastructure bond at 811 crore. And that to bond 1,000 crore we have raised. Apart from that, there is a deposit growth to fund the advances. So from the liquidity front to fund the growth, there would not be any problem. And
I think what she's asking is that from our statement. Madam Bhumika, if I am correct, please correct me.
Yes, sir.
CRR we are having, SLR we are having. So around, I think, 20-25,000, that total 40,000 crores is in liquidity. So I think your question is from that.
Sir, yes, my question refers to that we are operating expenses are more than that the return that we are getting.
Ultimately, it will convert into two things, madam. So there is no excess LCR we are carrying second. Neither we are having whatsoever, there is neither a surplus which we are deploying as a repo, or maybe we are borrowing, number two. Number three is that if you take, because it will straight away converge into CD ratio. So when CD ratio is around 78% level, so that also shows that it is very well managed, not the aggressive side and not the lower side.
Okay, sir. Okay, also there is one more question that bank has comparatively smaller national market share, that is 1.2% as compared to other state banks, because it is mainly concentrated mostly in the western India. So do you think that there is less pricing power as compared with other banks? Because it can apparently make banks to increase its risk appetite to protect its margins and profits.
So, if you are mentioned about the market share that we are commanding, is that you wanted to know about? And in terms of growth, how we want to go forward, is that your question?
Sorry, sir, you are not clear.
Okay. I was trying to understand, Bhumika, exactly what you would like to ask us. Whether it is the growth you are trying to figure out how we are planning to grow our market share in the.
I want to know the risk appetite for the company, because it has a lower market share in the market as compared to the other state banks, because it is mostly concentrated in Maharashtra. So
Okay, got it. So I will try to answer that. First of all, some misconception is around that. We are not, predominantly in Maharashtra. I think our 50%, more than 50% presence is outside Maharashtra. If you ask me, last 3 years, the new branch opening has all been outside Maharashtra. And going forward, we have a plan, as I mentioned just now, of 1,000 branches. So I think the entire expansion is outside Maharashtra, not because Maharashtra is not important. Maharashtra is the state which is almost 27% contribution to the nation's GDP, but I am more than adequately represented here. And if at all there is a center new upcoming, I will definitely want to open my outlet within Maharashtra also. But currently, as the situation is, we have our adequate presence within this state, and we are trying to identify and explore in areas where more emphasis is coming from the central government in terms of outlays to those states going forward, or new growth centers that are coming up, or potential centers where we are currently not present. So broadly around these 2-3 areas, we are deciding to expand our reach, and this expansion, geographical expansion, currently is being envisaged all outside Maharashtra.
Okay.
And we are not averse to looking at growth opportunities wherever, in whichever sector, whether it is a RAM, which currently is seeing a robust growth in the industry, and whenever in the corporate cycle we see uptick, we will definitely want to participate in any of those opportunities that are coming.
Madam, regarding your question, cash flow, the surplus was there. In 31st March, there was a cash surplus in the form of the RBI balances. And that we have given to operating assets, mainly to advances, to increase our interest income. So that's why there was a decrease in the overall cash surplus as compared to 31st March.
Okay. Okay, sir. Thank you.
Thank you. The next follow-up question is from the line of Jay Mundra from ICICI Securities. Please go ahead.
Sir, hi. In your opening remarks, sir, I think you mentioned that you have managed to upgrade or resolve 700 crores stress. What was that, sir? If you can elaborate.
Okay. So, there are exposures in some state entities, and one of the accounts may move from standard to SMA 0, and that is why the SMA was 5.8%. But if I exclude those one or two accounts, which are state entities and for some technical reasons moved to standard to SMA 0, that was the number I just mentioned. That 717 crores, I may not like to name the account, but it has moved to the standard category. So otherwise, my overall stress in the loan book stands at 5.09.
Yes, so sir, 5.09 is excluding the 700 crore exposure, or this is including 700 crore?
No, this is excluding. Today when we are talking, this account has already moved back to the standard category. It is only that as of 30th September, this account appeared in the SMA 0 category.
And this is the entire SMA book, SMA 0, 1 and 2. Yeah. But if you look at SMA above 5 crore, SMA 1 and 2 above 5 crore, then that figure is 0.19%. 0.19%.
Understood. So this was because this must have been large corporate exposure only, right? I mean, that is fair to assume, but which has now become SMA 0 or standard only. It has become perfectly standard.
It is a standard, but it is out of SMA.
Right. Okay. Right. Sure. And sir, there were media reports. Of course, it looks like we don't have exposure to, MTNL and RINL. But fair to say, I mean, there have been media reports suggesting that these two accounts may be downgraded or would have been downgraded. But we don't have any exposure to those two, right? Is it fair to conclude that?
You're right. We have no exposure to the two accounts.
Right. And sir, On recovery pipeline, right, sir? I mean, this quarter you have your recovery remains more or less similar. Recovery from TWO is episodic. But how do you see recovery pipeline? I mean, are there any large cases where you have an exposure and which are seeing higher chances of recovery over the next 6 months?
So typically we are doing fairly well in the recovery. In fact, in the last quarter we did a mega auction drive, e-auction drive, wherein we could resolve almost 1,000 accounts, and these are the smaller category accounts, and around 300 crores were recovered in a drive which was for 45 days. So there is a complete focus on recovery. I can tell you that around 4,000 crores is my gross NPA book, and we have also with us 21,000 crores of write-off book, within which the NCLT is almost 8,800, and with out of 8,800, 5,100 crores is already where the resolution has come, whether liquidation order has come to me or the RA has been declared under NCLT as a successful bidder. So this 5,000 crores of NCLT which have resolved, I sense that whatever be the rate of recovery, maybe if it is 30-35% is what we typically see as recovery. So this 1,500 crores from the NCLT book itself is somewhat recoverable within this financial year itself.
Wonderful. Okay. Yeah, that is all from my side, sir. Thank you.
Thank you. The next question is from the line of Sneha Ganatra from Star Union. Please go ahead. Ms. Ganatra, your line is unmuted. Please proceed with your question.
Sir, any capex driven story, any capex driven loan book growth are you expecting?
Can you please come back, Sneha? We could not hear properly.
Yeah, on the corporate side, are we seeing any capex driven loan book growth which we are expecting?
Okay. So if you are asking about the private capex cycle, that issue which has been discussed quite often and only estimated to be happening, yet I think that private capex cycle in real term is not yet visible, but we are seeing some green shoots are there in some sectors. Things are only moving up. Traction is visible. Even in our limits, the sanction limits, we are seeing that utilizations have gone up, and which probably are indicators that going forward there will be some project funding requirements emerging when the private sector is able to look at new demand, and then they would like to go for expansion. So, but I think in my view, another one or two quarters, we'll have to actually wait and see that complete traction coming from the private capex.
Large capex is not happening, but if you see there is a good growth in MSME advances. And what is happening that the large corporate itself they are not increasing the capex. Through MSME customers they are increasing the capex. A lot of outsourcing activities are happening in the large corporate. And we are taking benefit. That's why you can see that our MSME growth is about 20%.
Okay. My second question is on the treasury income. Any thought on the treasury income going ahead? We would be under.
Sorry to interrupt. Ms. Ganatra, you're sounding a bit muffled.
Second question is on the treasury income. Just wanted to know your thought. Going ahead, we are seeing that interest rate cut cycle would be panning out for the upcoming quarters. So how do you advise the treasury income to be panning out for our bank?
Yeah. So if the further interest are softening, still we are at appreciation, and if the further interest rate softening, then we will be able to encash that opportunity. But having said that, we want to make a trade-off between trading income as well as yield. So we will continue to protect the yield, and we will also eye the trading profit at the time of softening of yield.
Okay. And regarding, you mentioned that additional branches are planning to expand of 1,000 branches over the next years. So any additional OPEX requirement would be there, and how do you see your overall cost to income ratio to be panning out?
So cost to income, if you see, my guidance is to be maintaining it below 40, and currently we have cost to income of 38.8. So yes, we do realize that with new branch opening, there will be some operational costs which will go up. But what our sense is, when we are going to be operating in the growth center, very soon we can see that particular branch is actually contributing to the top line and bottom line of the bank also. So any cost increase and correspondingly, if we are able to generate more revenues and as a resultant more income for the bank, is something desirable. We don't want to limit ourselves in increasing that extra cost. But currently 38.8, and that's why my guidance is to maintain it below 40.
Okay, and the last question regarding, you have already mentioned on the stress asset quality, the slippages landed would be at similar levels. Any early signs or anything we would be watchful on basically on the asset quality in any of the sector or the segments?
So currently, as was just shared, our stress in the loan book is well managed. We have proper systems in place to closely monitor the various portfolios. I don't see all my, whether corporate book or other loan books, they are behaving fine. There is no incipient or stress that we are able to look at. I think overall there is no immediate sign of concern. We have also been looking at our underwriting benchmark, underwriting standards. For some time we have strengthened our standards, and we are seeing that we are onboarding the quality assets, and the loan book that is getting created is also of higher quality. So with this high growth rate, I am also able to maintain that kind of strict underwriting benchmarks, that we don't underwrite a loan below a certain threshold in terms of the quality of the asset.
Sir, last question. Uneven monsoon. Hello.
Ms. Ganatra, I'm really sorry. Due to time constraint, we won't be able to take any further questions.
Okay, no issues. Thank you.
So, ladies and gentlemen, I would now like to hand the conference over to the management for closing comments.
So, I think thank you so much. You have been supporting us, and you have seen that the bank has been performance which is a consistent one for last 15 to 16 quarters. We keep tracking our performance vis-a-vis the other players within the PSB space and also in the industry, and we find that we do lead in many of the parameters. And going forward, while we will be looking at growing our top lines, but we'll always remain mindful of how that growth in the top line is going to impact and whether it is going to impact favorably the bottom lines, and all these parameters where we currently are leading in the industry. We would like to see that not a single parameter we should be dipping in terms of future going in our performance. Thank you for joining this conference,